Hello, my name is Davis Jakes, and today I'm going to be presenting my final portfolio project for class BUA651 Financial Management at the University of Maine. So for this portfolio project, my consulting group name was Chickadee Capital Management Company, and the goal of this project was to create a market-neutral, long-short hedge fund portfolio in order to mitigate market risk and utilize pairs trading with the goal of having a net beta that was neutral or as close to zero as possible. The ultimate goal was to profit from both increasing and decreasing prices in the asset classes of our portfolio. So here's a quick snapshot that shows my initial holdings report. And my initial holding report decisions were really based on a combination of the throwing darts strategy with the sprinkle of research. And I learned that what was really driving these decisions was behavioral finance and a familiarity bias. I was predispositioned to choose securities that I was familiar with or that I had a personal bias towards, such as choosing gold for a long position over silver because I personally like gold more than silver. I did use some charts to look at past performance and make a guess about future performance, but I didn't have any quantitative logic behind my decisions. And so if I were to restart this portfolio today, one thing I would definitely do is use the financial tools that are in my toolbox today to make more informed decisions that I would feel confident about. Just real quickly, I wanted to show the pairs within my portfolio. So here you can see the asset classes I chose were commodities, equity, real estate, international equity, bond, and currency. This slide shows the limited financial knowledge I had at the beginning of the semester, which is that I understood that your portfolio needed to be diverse to help eliminate risk, and new diversification in a portfolio eliminated risk. But what I learned this semester is that this is called relevant risk, and this relevant risk can be further reduced through strategies like market and beta neutrality. And I really saw firsthand this semester how effective a market neutral strategy can be. So over the course of the 77-day project period, as of the adjusted closing prices on December 1st, 2017, the Chickadee Capital Management Company portfolio returned a positive 1.39% overall return before taxes and fees. And so this would be an annualized return of 6.58%. Another thing I learned was how important considering taxes and fees were as part of this project, because after taxes my net profit went down to 0.81 or 0.81%. So this is a 42% decrease, and so it's really important as investors that we pay attention to the expense ratio, taxes, and other fees associated with our investment. The best performing individual security within my portfolio was Corning Incorporated, which was a long position that I had, and that produced a 9.04% return over the course of the semester for an annualized return around 43%. The worst performing individual security was Energy Select Sector Spider ETF, and that was a short position I had, which experienced a negative 5.83% loss, which translates to an annual loss of about 27.6%. This chart on the right shows how my portfolio performed versus the risk-free rate, which is represented by SHI, and the S&P 500, represented by SPY. So as you can see, my portfolio finished somewhere in the middle of these two returns. It performed better than the risk-free rate, but didn't perform quite as well as the S&P 500 index. So this slide shows the pair performance within my portfolio, and this is one of the results that I'm most proud of. Even though I had individual investments that produced negative returns, these losses at the individual level were offset by the pair trade that they were in. So as you can see here, all of the pairs within my portfolio had positive returns. And I believe this shows that the portfolio was successful in creating highly correlated pairs that mitigated risk and produced returns in the case that an individual investment was either up or down and went in the opposite direction that I expected. So by really definition, this market neutral long short hedge fund strategy has a goal of profiting from both increasing and decreasing prices, and I think that's what my portfolio did, and in that sense my portfolio was successful because at the end of the day all my pairs returned a positive investment, and in the end my portfolio returned a positive gain. So in conclusion, I just wanted to go over some key learnings, and I learned so much this semester, and I learned the importance of doing my own due diligence when making investment decisions and not taking all financial information provided by websites and other sources at face value. I saw how those websites can misreport beta and how that can really have a ripple effect on your portfolio and the risk of your portfolio. Another thing I learned was how to calculate a beta coefficient and how these betas played a part in my portfolio and how they should be evaluated before I make a decision to invest in a security. So before this semester, I really only looked at investing at the individual security level and just really tried to make an educated guess as to whether that security was going to increase or decrease in price. But what I learned this semester is the importance of not just looking at return, but looking at the risk of that security, and for that level of risk, calculating the expected return, and really considering how that risk adds to your portfolio and looking at the portfolio as a whole rather than at just the individual security level. In order to calculate the expected return for a given level of risk, I learned how to use the capital asset pricing model and the SML line to create financial models that will really allow me to use the beta coefficients that I calculate for potential investments and really see if these securities are expected to produce greater than expected returns for the level of risk that they're bringing and adding to my portfolio. Another great tool I'm excited to try is Value Line, and again, I just have so many more tools now in my toolbox to be more confident about investing. Another big thing that I learned is the importance of making my own decisions that are based on my own financial calculations. So not relying on things I read in articles, and now having the confidence to calculate and make my own investment decisions. In the real world, this would really be my money that I'm investing, and now I just feel so much more confident about doing so, and am confident that I know what to look for in an individual investment and how to build a successful portfolio that minimizes risk while maximizing return. So that relationship between risk and return is one that I really didn't understand before this class, and with the tools I have now, I realize that finance is not just a guessing game and it's not just getting lucky, but instead it's the ability to find small mispricings among securities and to invest in those mispricings and make money from those investments. And really the key to being successful in finance, I've learned this semester, is to make investment decisions that are not qualitative like I did at the beginning of the semester, but that are quantitative and that are based on numbers and based on mathematical facts. And I am so grateful to have these tools now and have this financial knowledge, and I really appreciate all the knowledge and tools that Professor Pank provided me with this semester. I'm excited to use them in the future, and I look forward to making real and not just Yahoo money in the investment world moving forward. So thank you again. Thank you again for a great semester, and I'm excited to get out there and try investing in the real world.